They told you the Fed would never touch XRP. They were wrong. The Fed's own language on stablecoins and real-time settlement now mirrors what Ripple Labs built XRP to do.
I believe we can and should do more to support those actively transforming the payment system. To that end, I have asked Federal Reserve staff to explore the idea of what I'm calling a payment account. Today, Federal Reserve banks provide access to master accounts and financial services to legally eligible entities following our guidelines for evaluating account and services requests. The payment account would be available to all institutions that are legally eligible for an account and would be beneficial for those focused primarily on payment.
Only a few years ago, central bankers dismissed crypto as speculation. Today, the U.S. Central Bank is publicly recognizing stablecoins and tokenization as drivers of payments infrastructure. In his speech of September 29, 2025, Christopher J. Waller declared that stablecoins are simply a new form of private money and will exist alongside other payment instruments.
Stablecoins are simply a new form of private money and will exist alongside these other payment instruments, provided consumers accept them as safe, low-risk assets with regulatory protections.
That statement didn't come from a crypto firm. It came from the Federal Reserve. When the Fed describes stablecoins as new money, you know the narrative has shifted. Waller emphasized that private sector innovation in stablecoins holds promise, stating the Fed will support innovation while preserving efficiency, safety, and choice. At a Dallas Fed event in July 2025, he said stablecoins will make many types of payments cheaper and faster, and will drive down the cost for households and consumers.
And we're trying to develop that now to have it more, again, a faster, cheaper payment system for the U.S. taxpayer. So that's kind of what we do. That's what I oversee. It's been a long part of our history. Presentation. They don't pay interest. You have to have them fully backed. There's no banking credit backing this up. It's just pure liquid assets, treasuries, or reserves in the Fed. And the whole idea for me is that this is just going to introduce competition in payments. It's going to make cross-border payments so much easier. It's going to make them faster, and it's going to make them cheaper. And that's the goal for me as a free market capitalist economist, is I want competition in payments to drive down the cost for households and consumers and businesses. That's it. Banks have to compete. Sorry, that's your job.
It's no longer just an asset category. It's a payments revolution and a regulatory pivot. Meanwhile, Ripple has advocated for a level playing field between banks, fintechs, and token issuers since the mid-2010s. That phrase is now echoed in Fed discourse. Fundamentally, stablecoins are becoming the rails. XRP may become the bridge. Ripple's mission: build the Internet of Value, money moving like data, instant and programmable. Its core infrastructure, the XRP Ledger, XRPL, isn't designed for speculation. It's engineered to bridge currencies, institutions, and value flows. In 2014, Ripple's white paper said inter-ledger protocols would connect closed systems into one open network. Fast forward to 2025, the Fed is now assessing how to integrate distributed ledgers and tokenized assets with its core functions. In other words, the rails Ripple built are now compatible with what the Fed wants. On July 14, 2025, the FedWire Funds Service implemented the ISO 20022 messaging standard in the US, enabling richer data and interoperability across payment systems. ISO 20022 allows payments to carry metadata, asset type, origin, settlement instructions. It's the common language between banking and blockchains. RippleNet and XRPL have supported ISO 20022 compatible messaging since 2020. Effectively, the Fed now speaks Ripple. Once both systems share a language, the only remaining barrier is regulatory and operational, not technical. In July 2025, Ripple announced RLUSD, its enterprise-grade US dollar stablecoin, and selected BNY Mellon as primary reserve custodian. The joint announcement stated they are bridging the gap between traditional finance and crypto ecosystems. This isn't a retail stablecoin. It's built for banks, institutions, and regulated flows. BNY Mellon will manage one-to-one USD reserves and provide transaction banking to underpin RLUSD operations. That institutional foundation is precisely what the Fed and banks have demanded. Ripple filed for a U.S. National Trust Bank charter, Ripple National Trust Bank, in August 2025. If approved, Ripple could custody client funds and tokenized reserves directly, issue and redeem stablecoins like RLUSD, interface with the Fed's payment systems under regulated status. In short, the XRPL could transform into an extension of the US payment system, with XRP as the bridge token. Current disclosures still show BNY Mellon holding reserves for RLUSD, so claims that the Fed itself holds those reserves are unverified. The US economy currently uses FedWire for interbank transfers and FedNow for instant domestic payments, launched in 2023. Neither, until now, has native access for tokenized assets or bridging multiple currencies. Waller said stablecoins will foster competition in payments and make cross-border transfers faster and cheaper. Ripple's XRPL, RLUSD, and bank charter path position them to fill that gap, if regulators allow. The tech is ready, policy is catching up. Here's what's verifiable. RLUSD supply surpassed $500 million by July 2025. Waller's speech confirms that stablecoins are simply a new form of private money, moving alongside traditional cash and deposits. Over $120 billion in global stablecoins were in circulation around October 2025, roughly representing approximately 1% of US M2 money supply. These data points show momentum, not hype. They show the infrastructure is scaling. Before institutions finish lining up, retail still has a chance to anticipate the move. This is where Unich comes in, a Web3 OTC platform offering access to pre-TGE projects. Over $1.3 billion in OTC volume, 5.5 million users, access to early rails before mass market catches up. Not financial advice. Always DYOR. Find the official link below. Once the infrastructure is acknowledged, adoption accelerates. Ripple's deal with BNY Mellon signals banks are no longer dismissing tokenized dollars. Other banks are testing tokenized settlement systems, example, JP Morgan, Goldman Sachs. But none have built a public ledger with native asset and licensing path like Ripple. That's why Ripple's path is institutional, not disruptive. The narrative isn't war with banks, it's integration with banks. When Waller announced possible skinny master accounts to onboard payment firms directly to federal rails, the message became clear. Non-bank firms may soon access the Fed system, because once one viable tokenized settlement path exists, the rest will follow. Speaking of infrastructure, the Unich IDO is now live. The $UN token launches at 0.15, offering 11% affiliate rewards, 8% USDT plus 3% UN, and 25% discounts for NFT holders. Fully registered in Lithuania, low FDV, high utility ecosystem, and over 5.5 million verified users. Not financial advice. Learn more through the link below. The Federal Reserve isn't joining crypto. It's absorbing its technology on its own terms. Stablecoins are no longer experiments. They're the new rails. And Ripple? It built those rails years before anyone cared. When the Fed speaks about a level playing field and Ripple applies for a national trust bank, that's not coincidence. That's coordination. We're watching the digital transformation of money, not in headlines, but in infrastructure. The dollar is being rewritten on-chain, and XRP is positioned as the connective tissue between systems that once couldn't talk to each other. The Fed provides the legitimacy. Ripple provides the code. Together, they're engineering the quiet merger of crypto and central banking. And by the time the world notices, it'll already be standard. You can ignore it now, or remember this moment when you see it happen. Subscribe to Wealthy Wise, drop your opinion below, and stay ahead of the noise.